Hey guys, it's Vic from Grasping the Market and welcome to our market briefing. Today we had a little change versus the Wednesday session. We practically had an inside day, except for a few ticks above Wednesday's high. But the picture remains the same ahead of the non-farm payrolls, with the exception that probably and potentially the inventory got a little bit of a rebalance. I'll talk more about that in a minute. So the monthly continues developing above the 3,000 area clearly, and by the way, above the 3,100 as well. The weekly, although we stopped the one-time framing, the sharp bounce that we saw on Tuesday has been maintained, and the gains achieved on Wednesday, including the gap left at the open on Wednesday, has been respected and is holding. And I have to say that the structure to the upside is quite bullish. It's normal when well, I wouldn't say normal. Nothing is normal, but it is common to see that when a market moves aggressively in either direction, it kind of needs to pause, like balance a little bit before continuing. And this is related to the inventory imbalances that could create from such situation. So when we look at the market profile, we open slightly 3 ticks above Wednesday's high and immediately drop lower very aggressively. You can see the sharp move, potentially some liquidation from the longs that took positions on Wednesday, sorry. You can see that yesterday or the day before, the market opened, gap up sharply, move up, and struggled to find continuation through the session. Towards the end, it extended a little bit, but was not able to get follow through, and there was some liquidation at the close. On the overnight, we explore to the upper side, but when the morning opened, potentially some concerns on the market about this whole impeachment thing put the market under pressure. Maybe some people liquidated longs, maybe some sellers got encouraged and they sold strongly. The move was really sharp, but what you need to notice there is that although the move was sharp, you couldn't reach the low, and the give back along the way on this move was quite significant. When we reached the POC, the settlement, you had a strong give back. The move continued, but you had a strong give backs, and the ultimate one was on the B period. When you approach the low, the responsive buying was very, very, very sharp, to the point that it went all the way back up to the halfback and stayed there for a while. Now, if you look closely here, after you have the A, B, and then a bounce back, you see some backing and filling done on D, because it went above halfback and then try again lower. And notice the E and G lows exactly matching the C low. And I did tweet about this because that's exactly where the liquidation from the day before stopped. And on the overnight of the previous day, or the previous overnight session, that level was tested 3 times. Actually, in the continuous chart, we can see that is this 08 area. Look at how that has been working. So one, then you see a little one there. Then when we go back up, you have 1, 2, 3, 4, 5, and then after the B flush down, you see a bunch of tests there. So that level is very, very visual and technical, and has been given support. I'm surprised the way that this started bouncing, but I suspected that if after C trying to get back, and the overnight low was around there, C trying to get back below that, failing, backing and filling, and then after this backing and filling, you try a couple of times and you don't get through, you have a potentially an inventory imbalance, and probably was too short, and that's what created this squeeze. towards the like IJK period. Now, K is a very interesting one because some news hit the wires about the trade talks, some concerns that the both parts are still at odds about how to reach a consensus, and that created a sharp drop in the market, about close to 10 handles. But the responsive buying was extremely strong. And guess what? It came exactly from that area. So that was a very mechanical uh, bounce, but it was enough to extend the highs and keep the highs and close the session at the highs. So it is surprising that the A high was not taken, but I would say that the overall behavior of the session uh, could be very well an inventory rebalance from yesterday. So yesterday you have a remember that on Tuesday the market like managed to rally for the whole day after a sharp move in the morning. It rallied all the way back. Then you gap up, then you push strongly, and then you keep these highs. It could be that the market was a little bit too long and required this correction before continuing. So I don't know what's going to happen tomorrow. We have non-farm payrolls. Immediate focus definitely is on the 2-day balancing range that we have here. We are accepting this. We don't have continuation just yet, but I would say that this pushback from an initial attempt to go lower is very strong. If these levels are maintained, I would expect further upside, and keep an eye on this 24 level, because that 24 is the day that the big drop happened, which was on Monday when the money came in after the holiday. That was the afternoon pullback. So that's the next big reference to the upside. Obviously, it depends what the market will do after non-farm payrolls, but you can see here a strong trend line being respected, and now we are trading above the 30-minute 200 moving average. So let's see what happens then. Trade well. Remember to keep your powder dry. There will be plenty of opportunity. Wait for non-farm payrolls to play out. Let's see how the market reacts, and well, let's see how the week ends.